International markets for April 22nd, 2021. This is RV Ramachandran. In this video, we are going to provide our biweekly update on 10 international equity markets. As we discussed in our first international markets segment, this video will be useful for traders regardless of what market you trade to get a sense for those global money flows and the forecasted timing associated with those flows. We will start with the ASX 200 and then shift over to Asia and look at the Shanghai, Nikkei, Kospi, and Nifty. After that, we will shift over to Europe and look at the DAX, CAC 40, and FTSE. And lastly, we will finish up with Latin America and look at the Bovespa and the IPC Mexico. So let's go ahead and get started and jump into the analysis, and we will start with the ASX 200. Okay, so this is our weekly and daily grid. First, I just want to walk through what indicators we have on this chart so that everyone is on the same page. First, I want to highlight this weekly momentum indicator that you can see right here. When it is purple, that indicates negative momentum. When it's green, that indicates positive momentum. We also have our intermediate term cycles here at the bottom. These are all manually drawn on all of our charts, and they're simply a way for us to visualize the money flow patterns. On the daily chart, we have our slim ribbon, which is our primary indicator for the daily momentum, and we also have our daily cycles to see the shorter term money flow patterns. And lastly, we have our slim ribbon PO, which is a proprietary indicator, and it provides our momentum continuation signals. So let's go ahead and shift over to the weekly analysis here. So as we highlighted in the last video, we saw the likelihood of an early bottom that had formed here, and this early bottom has now proved accurate, as we are now very clearly in a new intermediate term rising phase. The weekly momentum is now firmly positive and turning up sharply, as you can see here, and all of these are good signs that a bottom has formed and you are early in a new rising phase. If we shift over to the daily chart, you'll see this beautiful bull flag that formed right here that tested this zone from 69.59 to 68.75 and has blasted off on the upside. We were looking for a low to form 422 to 54. You can see that the low basically formed one day early, which is totally fine and normal and inside of the principle of variance here. And this is really a super bullish setup here in the S&P ASX 200. On the upside, we're looking for a test of this short-term 61.8 to short-term 78.6 here, from 71.81 to 72.56. So a super positive pattern in the S&P ASX 200. And note the beautiful buy signal that we got on the slim ribbon PO here off of that bull flag. So everything was lining up. You had a short-term cycle low due, you had a buy signal here on the slim ribbon PO, and we had tested a key level. So that's really a picture perfect signal here in the S&P ASX 200. If we shift over to the next one, let's go ahead and look at the Shanghai. So this is the weekly and daily for the Shanghai. On the weekly chart, we have this dominant weekly cycle, which is then broken up into these minor half cycles. And these have overall been very clear. If I zoom out on this chart, you can see that the key lows, which we show using these dotted vertical lines, really formed very close to the idealized timing here in the Shanghai. And what this overall indicates is that we're really just forming a bear flag here on the weekly time frame. We would look for one more test down to complete this dominant cycle prior to getting into a more favorable period here for the Shanghai. So overall, this is a pretty risky pattern given where we are in this dominant cycle and given the fact that our weekly momentum is also still negative here. The next key low is due 5.6 to 719. If we shift over to the daily chart, you can see what we're looking for here. So we last looked at this right around here, and we had this dip and then one more rally. Now this dip really came right on time as we were looking for a bottom to form. So really we're just in a very choppy time period here. We look for this zone from 34.82 to 35.30 to really hold it on the upside, and then to get this to roll back down on the downside. So there isn't a whole lot going on at the moment in the Shanghai, but we are looking for a high to form around this early to mid-May time frame. So let's go ahead and look at the next one. We will look at the Nikkei. So this is the Nikkei. What we have here on the Nikkei are these beautiful dominant weekly cycles, which are then broken up into these minor thirds. If I zoom out on this chart, you can see how clear and consistent these cycles have been. And keep in mind, I'm going all the way back to 2018. You can see these beautiful rising phases and corrective phases, the rising phase and corrective phase, the rising phase and corrective phase, the very strong rising phase where we used up this whole cycle rallying, had a very minor pullback, then blasted off on the upside. So absolutely picture perfect cycle action here. What we're looking for at this point is for this to really roll over back on the downside into this next key intermediate term timing. The next key low is due 531 to 712. If we shift over to the daily chart, what we have here are just bullish cycles after bullish cycles with these beautiful signals here on the slim ribbon PO, all pointing only to the long side, and you can see the nice impulses we had here in each of these time periods, right? There really hasn't been any reason to be negative on the Nikkei. Now, much of that has changed, and let's highlight why. So you can see that we had this rising phase here and we had a rally. Now, this rally has turned over early in this cycle, and we are now in this corrective period here on the daily time frame. The next key low is due 428 to 518. Now note that we had this mid-cycle low due. This low formed a couple of days late, and I've drawn in this blue channel here just to indicate the likelihood of a bear flag forming, and we would look for this to turn back down one more time on the downside. So that's really the picture here in the Nikkei, a risky pattern setting up, but in the grander scheme of things, this is really just a big range. So we really need to break out of that range in order to get a more meaningful move. So really just a little bit of a flag, one more test lower, one more rally, then watch to see what happens in that next rally. Is there a sharp failure or not? So we'll have to monitor that, and that more risky time frame comes out in the later part of May. So just keep that time frame on your radar. If we shift over to the next one, we'll look at the Kospi. So this is the Kospi. What we have here for the Kospi on the weekly time frame is this dominant weekly, which is then broken up into these minor half cycles. And these dominant cycles, if I zoom out once more, are super clear. You can see the very muted rising phase and the left-hand translation where we sold off for the rest of this cycle in a very bearish overall pattern. And you can see we had a rising phase that also failed early, rolled over, the rising phase, then the sharp sell-off, the rising phase, and the very mild corrective phase, and then the super strong rising phase here in the Kospi. So I just want to highlight some of these dominant cycles because it's really where the dominant money flow patterns really are. What we have here is more range here in the Kospi. We are very likely on a more longer term picture, setting up for one more pushback to the upside going out into the summer, into the early fall time periods. Just want to put that on the radar. But right now we are looking for a high to form and to get one more dip right here back on the downside into this next forecasted timing, which we show using these blue dotted lines here. The next forecasted low is due 6.7 to 7.19. If we shift over to the daily chart, you can see that the Kospi is forming a very positive cycle in this cycle right here, where we are basically rallying for this whole cycle and are just getting a very mild pullback right now. Now, given this overall picture, we will look for one more push back to the upside, and then we will be monitoring this time period around here, right around mid-May, to watch for a high to form and then to start seeing some selling back on the downside. So keep that mid-May time period on your radar as we walk through many of these symbols. You'll see that we are looking for highs around that time period, and at the end of this video I'll talk about what that really means to us. So if we shift over to the next one, let's go ahead and look at the Nifty. So this is the Nifty 50. What we have on the Nifty are these very nice longer dominant cycles here, and if I zoom out on this chart, you can see how clear these cycles have been. We add in, as I mentioned earlier, these dotted black lines, so you can see how the key weekly lows formed relative to the idealized timing, which means relative to the troughs of these cycle brackets that we have drawn on the chart, and they have been really very clear going back many years. If we zoom in, let's go ahead and see what's going on now. So the Nifty is in a corrective period here on the intermediate term. The next key low is due 531 to 823. You can see that our weekly momentum is also negative, so all of this is lining up for further downside in our view. On the downside, we have an intermediate 38.2 and an intermediate 50 at 13,943 to 13,483. That's really the zone that we would look for on the downside into this next corrective low. If we shift over to the daily chart, you can see these beautiful daily cycles here in the Nifty with this dominant daily cycle, which is then broken up into these minor half cycles. And what I've done is I've drawn in how these dominant daily cycles have formed over time, and I've added in these green arrows to show that we've had a positive cycle. What does a positive cycle look like? That's when you have a cycle high that's higher than the prior cycle high and a cycle low that's higher than the prior cycle low. And under those conditions, you look for a new swing high to form in that next cycle. And that has happened with each of these cycles going back to late last year. Now we have our first sign of change here. I want to highlight that we have now violated this key cycle low, which says that we are now in a negative cycle very likely, and we will look for lower prices overall into this next corrective low. Now the next short-term low is due 5.6 to 5.19, and if I zoom in a little bit here, you can see that there is a mid-cycle low due, right? So we're looking for a bear flag to form and for this to roll back down on the downside. Now on the upside, we are looking for the Nifty to test this 14,604 to 14,883 zone. That's really where we would look for this to fail and then roll back down. Also note that our slim ribbon is now configured negatively, as you can see here. So let's go ahead and shift over to Europe, and we will look at the German DAX. So this is the German DAX. What we have here on the weekly time frame is a dominant weekly cycle, which is then broken up into these minor half cycles. And these dominant cycles, if I zoom out on the German DAX, have been very clear. Note this beautiful head and shoulders that formed here, and we almost got right to that target here back in late 2018. So a picture perfect and a very clear head and shoulders that formed there. If we zoom in, let's go ahead and take a look at what's going on now. So we are in a very bullish overall mode here with super positive upside momentum here on the weekly time frame, as you can see right there. We are looking for a high to form relatively shortly here. We are also testing some key intermediate term levels here from 15,345 to 15,802. We would really look for the DAX to not really get through that zone and then to start to roll back down on the downside into this next forecasted timing. The next forecasted low on the weekly time frame is due 525 to 726. If we shift over to the daily chart, which is on the right here, you can see that we have been tracing out positive cycle after positive cycle in a very bullish overall trend that you can see here on the weekly time frame. We were due to form a short-term low. The short-term low was due 414 to 54. You can see that we had this pullback, and we are now likely in this short-term rising phase here in the German DAX. Now, I've added in this note, watch for an early high in this next cycle. And that is because of where we are in this dominant weekly cycle. And given that we have already had the move that we have had and are testing these key levels, the odds would favor that an early high would form here on the daily chart, and we would see some rollover back on the downside. So we'll be watching for an early high right around this early to mid-May time period. So just keep that time period on the radar. If we get a rally here, and then we get a failure that takes out this daily cycle low, that would say this overall bullish cycle structure that we have seen here is now over with, and we are really setting up for further downside. So this is a very key chart to be watching here, and that's why I wanted to take a few minutes to highlight it. So let's go ahead and look at the next one. We will look at the CAC 40. Okay, so this is the CAC 40. We have the weekly on the left here. For the CAC 40, we have a dominant weekly, which is then broken up into these minor half cycles here as well. And I just want to go back to highlight how clear these cycles have been over time here. You can see with the key cycle lows have formed very close to the idealized timing here as well. If we look forward, you can see that we had and are in this intermediate term rising phase here. We are testing some key levels here on the upside in the CAC 40, and we will look for a high to form relatively shortly here, and then a roll back down on the downside into this next corrective low. The next low is due 5.3 to 6.14. If we look at the daily chart, you can see these beautiful cycles and positive cycles throughout this whole time period here. So there has been really no reason to be anything but positive on the CAC 40. What we see here is this evening star that formed. That evening star likely marked the high for this cycle, and we are now in this very short-term corrective period here on the downside. Now, one thing I did want to note is that we do use candlesticks to help us to identify cycle highs and lows. Slim does a fantastic job walking through how we do that in the cycle analysis workshop if you wanted to check that out. So in terms of what's going on with the CAC 40, we have this short-term low due, right? So the short-term low is due 414 to 429. We would look for a minor rally in this short-term rising phase, and then like the German DAX, watch for an early high to form in this next cycle and then a roll back down on the downside. If we were to get a pattern like this, that would say that this forecast on the weekly is in play, and we would be entering into a corrective phase here on the weekly time frame. So keep this on your radar. We will be watching around this early to mid-May time period here in the CAC 40. But currently, the daily slim ribbon is still super positive, and the weekly momentum is also positive. So we would need to see some of this change in order to get more negative here on the CAC 40. Let's go ahead and look at the next one. We'll look at the FTSE 100. So this is the FTSE 100. We have some pretty clear cycles here in the FTSE here as well. We have just one single cycle, which means we see one clear dominant money flow pattern really in play here. We are testing some key levels here from 68.65 to 70.73, and given where we are in this cycle, we would look for this to roll back down on the downside. Our weekly momentum is still positive, as you can see right here. So we do want to see that neutralize, really, meaning flatten out and then turn negative to give us some clues that we are in this corrective period. But right now we are still in a intermediate term rising phase. If we shift over to the daily, you'll see likewise that there is a short-term low due 419 to 427. We basically formed a right-hand translation where we use this whole cycle rallying. It left a short window of time for a pullback, and we would look for one more test back to the upside as we have drawn here. Now, this next rally is going to tell us a lot about what we can look for moving forward. If it blasts off on the upside, then we would likely look for higher prices here on the weekly. and then a higher low to form. So right now we have this forecasted to make a high relatively shortly on the weekly and then roll back down. This will all be based on what happens in this next short-term rising phase. But currently, the highest odds are that we are looking for a high to form in this early to mid-May time period, and then to look for a rollover back on the downside. So we'll have to see how this plays out. The slim ribbon on the daily is also very positive. Now let's go ahead and shift over to Latin America, and we will look at the Bovespa. Okay, so this is the Bovespa. What we have here is a dominant weekly, which is then broken up into these minor half cycles. And we are really due to form a high, and we are looking for this next high to be lower than that old high, and then to see a rollover back on the downside into this next forecasted timing here. The next forecasted low is due 426 to 628. Now, what I do want to highlight is a very positive daily cycle structure still in the Bovespa here. We are very likely going to form a cycle low that's higher than the prior cycle low here. The next low is due relatively shortly, due 421 to 430. So what we're looking for is just a mild pullback into this 117.754 to 115.146 zone, and then another push back to the upside. We would want to watch for if this next rally fails and then rolls back down. We'll have to see, but we are monitoring for a high to form around this mid-May time period here as well. But currently, the daily cycle structures are not negative, so it's very important to note that. But we are looking for this to get a dip here on the weekly, and then that will likely set up a really nice long side trade idea here in the Bovespa going out into the late summer, into the early fall. So just keep that overall picture in mind. I try to always frame things in terms of what I see as the bigger picture opportunity versus some of the smaller opportunities. And what really jumps out to me is the longer term bullish picture here in the Bovespa. Lastly, let's go ahead and look at the IPC Mexico. So this is the IPC Mexico, and on 419 I have added this note in that there was a strong likelihood that an intermediate term bottom formed here in late March. We were looking for, in our last video, we were looking for one more pullback here, and this would form the low. But based on what we're seeing here and the fact that we were in the forecasted weekly timing here, the highest odds are that the bottom is already formed, and we are in a very positive intermediate term rising phase here in the IPC Mexico. On the upside, we have an intermediate 61.8 here, if I modify this axis, at 49.718, and a 78.6 at 56.28. That's really what we would look for on the upside. You can see that our weekly momentum is also firmly positive, as you can see here. On the daily, we just keep tracking out bullish cycles here in the IPC Mexico, and we're likely forming one more bullish cycle. We just look for a very mild pullback into this 48,000 to 47,385 zone, and then another push back to the upside. Our slim ribbon is also firmly positive, as you can see. So a very, very positive pattern in Mexico. Now that we have looked at all 10 countries, what are our key takeaways? Australia continues to look extremely positive. There is a really nice bull flag forming there on the daily, and we will look for a rebound back to the upside. In Asia, we see some downside risk building here. The Shanghai is testing some key levels on the upside, and we would be watching for a high to form and then for a breakdown below the prior daily cycle low at 3370. The Nikkei has failed from resistance and is in a corrective period. There is a mini bear flag forming there, and we would really watch for some follow through back to the downside. The Kospi really is the standout on the upside in Asia, and really looks like it's setting up for one more test back to the upside prior to any risk picking up back on the downside. And lastly, the Nifty is in an intermediate term corrective period, and we would look for this very small bear flag to fail back on the downside. If we shift over to Europe, we have positive short-term momentum in the DAX, CAC, and FTSE. We'll be watching this next short-term rising phase very closely for an early failure. We really need to see that daily momentum turn decisively negative prior to the odds favoring any meaningful breaks on the downside. And lastly, in Latin America, the Bovespa continues to hold up very well. We are looking for one more pullback here on the downside in the short term, and then one more attempted rally back on the upside. So overall, more or less range trade there for the next couple of weeks. And lastly, in Mexico, we have updated our projection to show the likelihood that an intermediate term bottom formed in late March, and we continued to be tracking out bullish patterns there on the daily time frame, and overall the odds favor a continued long side bias in our view. As we walk through many of these markets, you can see that we are looking for a short-term high to form around mid-May. This is very much in line with what Slim showed in the VIX analysis on FutureSpeak, where we are looking for a US market high around mid-May. This is how we decode the messages from the marketplace. We take in a lot of information and we share that with you so that you can see our rationale behind our sum of the evidence conclusions. We always share what we see as the highest probability scenarios, and now we will monitor to see if price confirms this shift in directional bias. So that's our look at the international markets for this week. We will do another review in 2 weeks. Please feel free to share any comments or feedback that you may have. Thanks again, and I hope you have a great day.